Inflation seems to be cooling down. The market is reaching all-time highs. What does this mean for the future in the coming years? And we have an election coming up. Financials could be a little bit wobbly during these times, but this is where you never panic. Keep an easy pace, continuously invest, and we're going to dive into some of these numbers. In July of 2022, inflation was around the 8% mark, versus now we're getting closer to 2.5%. And looking at this chart here, see, August 31st, 2024, we're at 2.53% versus in August 31st of 2022, we're at 8.26. This was, things was getting crazy. Things were getting pretty expensive. The job cuts didn't happen yet in the tech sector, but closer to the end of the year, that's when it started really affecting companies. They started panicking a little bit because the money borrowing was slowing down. The interest rates started increasing. The feds were stepping in a bit much more. Have they cut this too soon? I mean, they only cut it about 0.5%. I still think the economy is not in full throttle, full speed, running ahead, and everything is back all good. Home prices are still a bit high. We do see them slowing down a bit. And the spending of people are also not the same as they used to be. People are being more careful, more attentive, which is good. And it has to stay like that for some time. I think for the economy to rebalance, then you'll start seeing spending, people taking credit a lot much more because things are more comfortable. People got more savings, more liquidity in case they need access to it. Then that's when we should do it, because I don't think you should be borrowing when you don't have all this available. If you have $100 in the bank, you should not be borrowing $1,000. But if you have $1,000 in the bank, it's all right to borrow $1,000, because in case the worst thing happens, you have the ability to recover yourself and pay that loan off. And this is the way that we should be lending, except for the use case of a home. I know that's a risky investment, especially if you're doing it for an investment purpose, meaning you're renting part of it, you're buying it for that. To me, I don't think you need a 20%, 25% down payment. You could do it with an FHA or a first-time homebuyer program using the Freddie Mac with a conventional loan, which is at 3% if you're doing a single family, or 5% if you're buying a multi-family. Interest rates is around 5.875%. We're under 6%. It's about time that this actually happens. It is exciting to see that, but we're not completely out of the woods yet. The interest rate actually doesn't really matter. It's really what the home prices or people's incomes and affordability. The interest rates fluctuate up and down. Throughout history, it has reached as high as like 7-8%. People were still buying homes, but incomes made sense. The prices of the home made sense. Therefore, you were borrowing. So it really didn't really matter what those interest rates were. To the day where we are living, home prices are ridiculous. Therefore, the 6% on 100,000 that you used to do back in the days is a whole lot different than 6% on $1 million that you're doing right now, because I feel like this is where prices of home, they're like 10x from about 20 years ago in certain cities, in certain areas. As far as the rental market, I am seeing a bit of mix of high supply and high demand. When that happens, it creates a lot of noise for that matchmaking to happen. I had a unit up pretty much for rent. A lot of people just inquired about it. It's ridiculous. But a lot of people's income, savings just didn't match up. The financials has to add up. At the same time, I'm also conscious of how people are being, and see if there's ways I can accommodate and create some type of compromise. But I'm not going to be bending all the way back. We got to meet somewhere in the middle to create something that actually meets. But the rental market, it seems to be a bit wacky. This is where opportunities comes with technology to create that less noise, because you have increased supply, increased demand, but how do you create that matchmaking to be a lot much more? If you have 10 people against another 10, them figuring out exactly, how the match should happen is a lot easier, versus now you have 100 people against 100 people, because there's a lot more options for you to look at. It's going to take more time, more noise, making it a bit more difficult. It's not that there are high supply and low demand, or the other way, vice versa. Right now, I feel like they both have increased. At one point it was, but things seems to be balancing in terms of where they are comparatively, relatively to each other. Rents are definitely increasing. I'm seeing the prices of where I'm at, prices in New York City. It is still high, still kind of ridiculous. The rooming situation seems to be much more of an acceptable thing, much more common, and it's traveling over to the outskirts of New York City, spreading a lot much more, because in New York City, especially if they're in the 20s, 30s, people are doing that very highly. It's a common thing. In Brooklyn, very common. Long time People, especially if they're a migrant, this is how they got their start to living life, to be able to build for themselves. But now it's becoming more and more common in other places where people were renting apartments for maybe a portion of the price. But as price has surged, especially around 2022, and the incomes weren't increasing, people's jobs weren't paying as much, it's getting tight. So therefore, they have to kind of do this suck up for now and just take it as is until things are able to be rebalanced much better. Looking at the Dow, all-time high pretty much, NASDAQ all-time high. It's ridiculous. My portfolio is not an all-time high. I'm wondering why. NASDAQ all-time high. It's at 18,000. It's ridiculous. SP 500 all-time high as well. It's really just, I can't even say timing of the market. I have different diversity across different portfolios. I have a portfolio that's more tied to its indexes. That one is definitely at an all-time high right now versus the one I pick individual stocks. It's not at the all-time high that it was. It is higher than where it was at before. And there's a lot of growth for those stocks that are inside of there. So I'm diversifying different places to make sure that I'm covered in different areas. You can't just do one investment strategy across all your portfolios. You got to figure out, set this one up here. I got one that's really strong towards crypto, meaning I'm just buying companies like Grayscale. It has a strong concentration of Grayscale. As Grayscale stocks shoot up, that portfolio is gonna kill it. It's gonna do amazing things. Dividend-based stocks, PBR, it's pretty much flat right now from where it was at. Lumen, they're still pretty high, and if you bought from like, I would say 6 months ago when they were like $1, which I did not do, I would have pretty much 7x. I missed out on that opportunity. Crypto-wise, I did not buy more Grayscale yet, but they are reaching at a higher point when they are at. There's been some motion in crypto. Bitcoin Cash Trust at its peak of this year was at around $21, and now it's flattening up. It's slowing down. I want to get back in, I think for me, around $4. I don't think it's going to get around $1, $2. If it does, it might be for a couple of days, unless there's a super scare that happens globally. Then it's going to create that opportunity, and I'm going to get in. And same goes for all the other ones, like Litecoin Trust. But let's just see how crypto is doing, because it is live. We are in the weekend, and it seems like it increased a little bit, but not so much. We're still down from 6 months. 1 year ago, we're up about 47%. And this is just Bitcoin Cash Trust. And let's check Bitcoin, the daddy of it all. It moved 11% since last month. It's still down 7% from last year, but it's up 143% from the past year. Traction on this, I don't think there's a whole lot. I'm being patient. There's not really much that you can do except keep buying if you have the capacity to do that. I mean, I do have some set cash aside to buy more in case there's a bloody day. But if there's not, I'm going to utilize and leverage that cash for something else, real estate or whatever may be. Most of the stocks, especially the ones I own, like Lab, Ver, I don't have any right now. They're flattening up. They're still at their lows, but they're flattening up. HIMS, none of these are peaking at super highs. Netflix went super high. I did not sell anything. Right now, I bought this around 167. Facebook as well around 96, and they're both at an all-time high. I got a good concentration in terms of my retirement in there. Lucid Motors, these stocks that are in the EV space, they're doing okay, but they're not shooting up as high as I feel like they should. I do think Lucid might reach that 60 mark, but it has a lot to prove, just like all the other car companies like Tesla. Look at this, 45% from about 6 months ago, and year to date it's up only 4%. It reached an all-time high around $400. And remember, this had split. At one point, Tesla was like $3,000 a share, but there was a stock split that happened, so therefore it pretty much recalculated based upon that. We're going to dive into our investment portfolio just to keep track of exactly how well the $1,000 portfolio has been doing and the $10,000 portfolio has been doing. If this is your first time tuning in, pretty much I created 2 portfolios back in December of 2023, and I wanted to see the progress that could be made over the course of time. This is a one-time purchase I did in these investments, considering that I'm buying this one time, I'm not recurrently purchasing in, see how well we can traction over time. So our $10,000 portfolio, we are in the negative. We are higher than where we were last time I covered this. We are only down $276. So we're almost back to breaking even. And I think a huge part of this is because of our crypto side. Grayscale, Bitcoin Cash Trust, those have been increasing. And some of the Doge, right, Shiba Inu, they've been increasing as well, which has increased the size of the portfolio. Everything else has been pretty much stayed flat. Nikola, Workhorse, Neo, all those in the EV space have been stayed flat. And then GoTo and Tile, they're in the educational space. I don't see these shooting up anytime soon. I think it's going to take some time. Economy to rebalance. A lot of laws based on education in China has to shift in order for things to happen. But I purchased in a lot of these in my personal portfolio when they were around, when GoTo was around $1. I think right now it's around $4. So I bought it when it was like being battered, bruised, and I saw a huge opportunity. It peaked like over $120, I think, back in 2021 or 2022. It was really nice. If it gets back there, I'm definitely selling at that price point, because I definitely bought it low enough. But I'm being patient. Those are certain stocks. It's like, I'm put it in, set it, and forget it. But for the sake of this portfolio, we purchased it. Let's just see real quick. We bought it at $3.55 per share, and we bought 56 shares, and it's right now at $3.70. So we're up just slightly. $10,000 portfolio is doing okay. It's not in the green like it was. It was high over 40% at one point, right? But we're down about 2% right now. So it's a small down, but we're going to get back up there. And our $1,000 portfolio, we're down 15%, a huge difference. This one is not as diversified as the 10,000. That's not the reason why it's down that much. They do kind of are almost equal for the most part. However, sometimes the 10,000 portfolio outpaced the $1,000 and vice versa. So this is just these two I have set up. $1,000 portfolio, I couldn't have as much in there because we only had $1,000. So I only purchased about 11 stocks, really. It's a mix of grayscale, a mix of EV things, and things I feel like are really going to take off in the long run. It seems that we are doing okay. We're not bankrupt, we're not crashing, but we're getting to a place of rebalance to the point where we're gonna reach a higher profit margin. Some of this is definitely being driven by crypto, and I feel a lot too in the technology sector. So I hope you found all this insightful. What you have to remember is you want to stay invested. Don't panic, don't sell nothing. If anything, buy more when you see things dip, as long as you still believe in that company. It's okay to take loss. I'm not your financial advisor. If you feel like you got to take the loss because you want to try something else, that's for you to decide based it on particular mathematical risk and analysis that you actually did. Part of it is feelings. I can say you got to have a sense of how well you feel this company is going to output, because no one can really predict that. You got to think about how you're making that decision, though, making sure it's not out of fear. I'm going to miss out, therefore I got to sell this, or I'm going to miss out, therefore I got to buy this right now. And when you do that, really missing out on where you're supposed to come in, or losing out when you're actually supposed to get out. So be patient, do your due diligence. Peace and love. Like, share, and subscribe so this can get out to others, so we can continue to enrich each other, encourage each other to stay invested, stay focused, and invest out of not fear, but actual calculations and proper risk analysis. Trust in Jesus. Have an amazing one.